Hello everyone, this is Evan here from the Trade Risk on Friday, September 9th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off with some individual names. Now it feels good to be back. I've been away from markets and screens for a little over a week now. Haven't been publishing too much, but apparently I got back just in time for some of the fireworks that were shot off here on Friday's session as we finished down minus 2.39% in the SPY ETF that tracks the S&P 500. So let's just jump into this action right now. Look at this. Look at today's session. Look at this week's session. First and foremost, we've been consolidating for over 7 weeks in a very tight sideways range, right? 1 week forward, 1 week down, 1 week forward, and just basically moving sideways and not making any progress. And this expansion in range and volatility is the hallmark of markets, right? When you have consolidation, you will eventually have an expansion of range and volatility. And we saw just picture perfect kind of market behavior today as a real explosive move kind of got underway after gapping down on Friday to the bottom end of this range prior support. But then we proceeded to sell off all session, closing on the lows and certainly making a big splash in the pool. So bears right now, right, undoubtedly, they have control, they have momentum, they broke us down. Bulls and bears, the buyers and sellers have been competing for control for the past several weeks in this sideways trend. We're in a long-term uptrend, right? That's constructive on longer-term time frames, but in the short term, momentum, there really hasn't been any momentum. It's been just kind of ping-ponging in this range as the bulls and bears kind of fight for control of this market, and we got a clear winner today, and that was the sellers as we snapped support, closed on the lows, and made a huge kind of expansionary move down to the downside. Now we are through the lower end of the Bollinger Band, so we are quote oversold on some metrics, but in a pure sort of breakout momentum phase, you have to be careful using those momentum readings. Capitulation, while today could be a one-day capitulative event, it's certainly not a point and not a high probability standpoint, at least in my opinion, to kind of step in here and just buy blindly because we had, a really outsized day or an outsized move. Let's take a step back here and look at the weekly chart, and let's look how important this 212.50 area, this more or less 50 cent plus or minus area is. This was the old all-time highs here in the S&P 500 going back to 2015. Remember, this is the area, this is the level that we broke out to new all-time highs back in July of just this year. So in very short order, we are now coming back in and effectively retesting, based on the close here, this major breakout level. So if you miss the move, if you miss the breakout move through July, if you didn't want to buy it up or you didn't believe in it and you want a piece of the action, now's your time to kind of buy the retest, or at least consider getting that shopping list together. If you're a bear, if you don't believe in this rally or haven't been over the past several weeks, you want to see us just come crashing down below this 212.50 level and fall back into this old range, creating a false breakout for the past several weeks, or the past several months. That's sort of the scenario where we're going to be waiting to see and kind of gauging this action over the next couple of days and weeks to see how this market reacts as it comes back into this prior breakout level. If we go back to the daily time frame, it's also important to note that based on the close today at call it 213 in the S&P 500 and the SPY ETF, we are approximately 3% off the all-time highs. So if you're someone that's interested in buying pullbacks of 2, 3, 4, 5% as markets are trending higher, we're at the 3% mark. So that should just give you some context of basically where we are in this picture. We know the level, the big level right below us here, to keep an eye on, and that's that 212.50 area. We did undercut the lows from August 4th, and we've now, we're at the lowest close since July 8th. So we're coming all the way back to this level here. This was the last time that we saw these prices. And again, this repricing is all happening in very, very short order. So basically, it's certainly a day to take notice, right? It's a change of I don't want to call it a change of trend, but it's certainly a change of market character, right? The quiet, sleepy price action that we've seen for the past many weeks is no longer here. We now have sellers in control, so it's time to tighten up positions, honor stop losses, and just sort of reevaluate where things are based on your strategy. For me, for us, for heading into next week, this is a point where if you weren't short here at the close, I find it very hard to get short just based on the close here, and I'd also find it just as difficult to try and buy this close as well. I really don't see much of an edge in my mind to do either one just blindly based on today's price action. So I think, for me and what I'm doing is just kind of waiting to see how this all develops. I'll keep positions on, I'll manage what I have, deal with those things. But as far as establishing new positions, I find it pretty tough here. I want to see how the market sort of reacts into next week. I wouldn't be surprised to see some follow through lower, but I would be, expecting dip buyers to kind of step in. And I do believe this was a pretty potent kind of one-day move. So that's the way I'm looking at things. It's a day to take notice. We have our levels that we should be watching, and we want to see if bulls can kind of step in and start to stabilize price. But I don't think it's going to happen overnight. It could take a week or two, and that's sort of the new kind of bulk, the new landscape that we're looking at. If we start to look at some of these other markets here, IWM still is holding up best, or looks the best out of the three majors, the S&P 500, the Qs, and the IWM. You can see again a very sharp move lower here, but you can see it broke this trend line all in today basically, and it's its first kind of definitive close below the 20-period EMA since going all the way back to mid-July. So this has been in a much stronger kind of uptrend than the S&P 500. It's been very sideways. IWM has been making progress higher, and this is the first kind of sharp break of that trend line and almost a retest of this important 120.50 level. Be much more interested and just have much higher expectation that dip buyers would be coming in here over the over the S&P 500, just sort of given the recent dynamics here. But we're going to have to see how this plays out. Again, short-term bearish behavior, and the Qs look more so like the S&P 500. You can see now they are clearly below their old 2015 highs. So while the S&P 500 is coming back in to test those 2015 highs, Qs are already back below them. IWM is again nowhere near its all-time highs, but recently had been holding up the best out of all three of those averages. So very similar behavior, a bear raid basically across all markets and sectors, on this Friday. Now, getting into some of the other markets, TLT. Really getting hammered here as well. Got beat up here on Thursday a little bit harder than the broad markets did. So maybe there was the bond market's kind of pricing in this a little bit earlier, sooner than the equity markets did. Thursday, we actually did get short TLT. We got long TMV, which is a triple bear inverse ETF. 3 times the TLT. We got long this on Thursday, had a very favorable day here on Friday given the size of this move for sure. We still hold that position. I'm still liking this breakdown, trying to see if we can get some more continuation next week. This has been tightly consolidating. This is one we've been watching for quite some time. We almost got the breakout here just earlier this week on Wednesday, but you can see that failed, and then we came quickly down the other side here and proceeded to break down. Almost like an island little top here as we had this big gap higher back here in June, and now we're kind of gapping back below that area and coming back down here. So TLT bulls look to be in trouble. We're holding our position short. We're looking for more on the downside, looking to take some profits next week. If we look at gold, this just moved sideways, didn't actually have much of an impact, a big day on Friday like many other things did. It's just comfortably kind of consolidating in this range. There's not too much else to say about it. You get the lower end here right around 125.25, up there around 130.50 is resistance, and it's in the middle of it, so we'll just have to wait and see how that plays out. Silver, a little bit more interesting. I mean, it's still just consolidating. It came all the way down here to the 1750, 1760 level before getting a bounce higher. and now it's kind of just drifting around here. So looks like it's just kind of consolidating. Certainly got hit harder here on Friday than gold did, but generally there is a little more beta behind silver. So we'll just have to wait and see how that plays itself out. If we go to oil, USO down 3.38% today. It's been having some big moves lately, so even a 3.5% down move doesn't look like all that much just because it has been moving so much. But you get some reference points to work with here. You have a series of higher lows getting put in from the August low here right around 9.25, and then you also have the highs here from just a few weeks ago at 11.30. We'll have to see if this is a new high pivot to work against. So we're just kind of tightening up, consolidating in USO. We'll have to see. It's right at the 8.20. No real directional commitment here from a structural standpoint on a bigger picture. So we're just gonna have to wait and see what kind of patterns kind of develop here with USO. And UNG also kind of consolidating. It's been moving around from this little under $8, $7.80 level, all the way up to $8.50. It's been playing around mostly in that 70-cent range, and it's just in the middle of that range. Once again, consolidating. These commodities all kind of moving sideways here, taking a breather and just kind of waiting to see which way all of these will end up leaning. As far as individual sectors go, most everything was pretty much crushed here on Friday. Energy still looking like one of the strong ones recently. It's above this kind of breakout area still, even though it did have an almost 3% down day here on Friday. It's still above the 20-period EMA. That's constructive on a relative basis. Financials, very similar situation, still getting hit here hard on Friday at almost down 2%, but still in an uptrend overall and structurally doing much better than some of the others. On the weekly time frame, you can see still above the 8-period EMA. Semis also taking a big kind of rollover here, but has been showing tremendous amount of relative strength. This will be an interesting dip opportunity here for anybody that's missed a lot of this run in the semiconductors. I'm sure it's worth paying attention to these names here, especially under the hood as this continues to pull back. And then finally the transports, which we just put out a post yesterday saying it was inching towards inching towards the 2016 highs, got smacked here on Friday as well. But on a relative basis, position basis, it's still holding up. It's below the 20 period, but looking a lot better than things like the staples, which are very clearly kind of rolling over here and just really breaking through support. Healthcare, which is now breaking back below this kind of important $72 level that it's been in. Utilities also continuing to stay weak, and discretionary, which broke back below a significant level. So all of those, you can kind of see the opposite sort of characteristics there. Energy, financials, semis, the transports, all doing a little bit better than the sort of defensive staples, utilities, and even some of these discretionary names as well. If we get into some of the individual names, Apple, had its big announcement out on the iPhone 7 yesterday. So far, I mean, again, it's sort of the product of the environment that we're in right now, but has clearly sold off here. On the weekly time frame, I do want to still point your attention to this trend line that we broke out of a few weeks ago. And you can see on the weekly time frame, we're just coming back in to test that 20-period EMA. So depending on where you live, this is still sort of could be an attractive risk to reward kind of pullback entry here. I'm not recommending it or saying I'm doing it because I'm certainly not in Apple or really on my radar, but I've just seen a lot of bearish sentiment on this stock recently, and I just want to point you out to the weekly time frame, which is trying to break this trend of lower highs that it's been in for a couple of years now. So I just want to pay attention to that if that's something that you're interested in from a longer term perspective. Facebook had a fast surge higher here to start this week, and then it just very quickly, equally as fast, has given most of that back. This was a trade that we were in. We got involved in Facebook here on Monday. This was the 29th, and we sat through this little consolidation, and we ended up taking up some partial profits here on Tuesday, and we took the rest off luckily near the highs here on Wednesday. This was a nice quick trade for us, and we're not sitting through any of this pullback here, but it'll certainly be back on our radar as it comes back into these old prices. Amazon you can see is pulling back, and it's really starting to develop in this little rising wedge kind of formation here. You're going to keep an eye on the bottom end of this trend line. If that's something you like to trade, keep that on your watch list. Google also coming back into support here at 788. This is where we broke out from off of earnings in July. We're coming back in and testing this area again. Bulls want to see us hold here, and you can see on the weekly time frame developing maybe a little bit of kind of a base here and support at this 785, 790 level. Keep that on watch next week. Netflix was making some pretty good progress to the upside. Friday, of course, stalled that. Finished down just slightly on the week, a little less than 1%. You can see this is going to be an important area for it, this $95 area. If we start to lose that again, then Netflix looks to be in trouble, but was acting well for the past couple of weeks, showing some nice relative strength, but you got to keep an eye on it now. Alibaba, this one, even with Friday's sell-off, you can see it still just closed at the 8-period EMA, so a tremendous amount of strength here in Baba. This one's been a nice kind of return to the upside momentum, so keep this one on watch. Definitely looks to be in play on dips, so keep Alibaba on watch. And then finally, Twitter, we'll just end there. Back below this kind of $18.80, $19 area, not looking so hot. The longer it stays below this zone, the more concerned I get. Weekly time frame, you can see you want to see the 8 and 20 still stay in bullish alignment. They are, but you want to see the dip buyers show up here around $18. You don't want to see it go too much further. This is where we found some support just a few weeks ago, right around 18 and a quarter. So let's see how this acts heading into next week. So hope that helps. I think that will end it there. Again, just to reiterate, we got some cross currents here. We have a day to take notice. Make sure you manage your positions. Look at where where those stop losses are in positions that you had on. Think about how you want to react, how you want to act or change your strategy if necessary heading into next week, now that we're not in such a complacent sideways market. As always, thank you guys for watching. Have a great weekend, and I will talk to you soon.